Thanks, everybody, for joining us for another episode of Insurance Gone Wild. I am your host, Dennis Settlemeyer, and my lovely co-host is...
Stephanie Lencioni.
Stephanie Lencioni. She teases me because I say it, always repeat it.
I know, but now I would be sad if you didn't.
I know, it wouldn't feel right, would it?
It would not.
It would not feel right.
I would have to wonder who you are and what did you do with my business partner.
That's right. That's right. So we're going to try to do something a little bit different. We're going to attempt to do something a little bit different today in that we're just going to go over some insurance definitions, things that we think might be a benefit to you as listeners or watchers. Those of you that are watching video, maybe some terms that you've heard, terms that get thrown around, you've read, you've had a claim. Maybe you talked to an adjuster that mentioned words. You have an agent that's mentioned some of these words. Maybe it's words you've heard your entire life, but really had no idea what in the world they meant. One
of those conversations where you're like, oh, yeah.
I got it. I have no idea what they're talking about. Yeah, exactly. So we've got a list here on my phone, and we're going to start going through them, and it's going to be Stump the Chump Day. And so we're going to try to do it. And we're going to kind of bounce around to some different types of insurance.
We will. Okay, I got one.
All right.
Exclusion. Exclusion.
You want me to get real technical or just a real quick definition?
I would like a quick, and then I will ask more questions.
Okay. Exclusion states that your policy is not going to pay for something. That's the basic definition. I mean, we could get more, but just real quick, there is an exclusion to your policy. If it's a homeowner's policy, you may have an exclusion for cosmetic damage to your metal roof. It's an exclusion. Doesn't mean they're not paying for the metal roof. They're just not paying for cosmetic damage.
Okay, so on my homeowner's policy, Dennis, where do I find, well, I need to make sure something isn't excluded.
Yeah, that would be on
where do I need to go?
That would be on your declaration page. There will be a list of endorsements, things that are added, and there will be a list of exclusions, things that are excluded. And you can look those up within the policy itself. So if you have an exclusion for marring or what did I just say? The cosmetic exclusion. You can see that you'll have that in your list of endorsements and exclusions. And then later down in the policy, you can look it up and actually get more information on what exactly is excluding, why, when, and all that kind of stuff. There's more detail. That exclusion will have its own section.
So I would like to go full circle on a previous topic we've discussed. For your auto policy, if you get pregnant in your car, is that covered or excluded?
That will be excluded.
Okay, there you go.
And to remind people, auto policies used to have, did not have an exclusion. And I'll tell the quick story. Guy and a girl go out. They have a good time.
I would like to reiterate, you still don't know if they had a good time or not.
They had a good enough time. 9 months later, pops out a kid. People were going back to the insurance company and saying, hey, I have a medical bill in relation to the auto, so I'd like for it to be paid, for all my stuff to be paid for the pregnancy. And insurance companies would fight it, but they'd eventually end up having to pay it. Well, now there's an exclusion for those types of things. They're not going to pay that stuff anymore. On commercial, I can tell you, because I figured that's where you were going. On commercial, when you have an exclusion, that's a huge deal. It's big on home and auto too, but it's big on commercial because most commercial policies are based off of what's called ISO forms. So if I look at almost every policy, a lot of policies, 90-something% of them are based off of these ISO forms, which are nationally recognized policy languages. So you have a CG, a commercial general liability form 0001. It is a standard form. And what will happen is the insurance companies will go through there and they will endorse it, add things to that form, or they will have exclusions where they pull things out of that form, say, even though the form says it, down here, we're not paying for it.
Psych. Yeah.
So that is the key. And the reason that is important is because if you don't understand your endorsements and exclusions, you could end up with a problem at claim time. Big problem, because you thought you had covered. I run into it all the time. That's the reason why I write so much commercials, because I shouldn't say most agents. Oh, I can say that fairly based on my experience. Most agents and other commercial agents I know will tell you the same thing. That's why I'm confident saying this, that everyday agent, if they don't write a lot of commercial, they don't understand those endorsements and exclusions. Those are so important. So when I get somebody's declaration page, which has those lists, that's the first thing I go to.
Right. Which is also why it's important if your agent or broker isn't asking the questions.
Yeah, we talked
on
about
the business stuff. You got to ask the questions. So, okay. Okay. So I'm going to tackle 2, 3, 4. Deductible. So I'm going to take it from a medical perspective. I hear all the time, oh, well, my deductibles.
Well, let's define it first.
Okay. Your deductible is the portion that you are responsible for paying at 100%. And then the insurance company will kick in.
Before the insurance company.
Well, yes.
Before they pay anything.
Anything with the exception of, on the medical side, copays. Copays start day one.
That's correct.
On the medical side, with the exception of copays. But let's say that you have a surgery or procedure, whatever. We'll say it's $2,000. You have a $500 deductible. You will pay. There's no copay for a surgery, so you're going to pay the first $500 at 100%. And then the remaining balance of $1,500 will depend on other details of your policy. But then the insurance company, from every dollar forward, will start splitting the cost with the member. And then on an auto, it's, hey, you got in a car accident. It's $10,000 to repair your vehicle. You have a $500 collision deductible. They're going to write you a check for $9,500. You pay the $500 at 100%. They give you a check for $9,500, the difference. It works the same if you total the vehicle or whatever.
Homeowners is basically the same way.
Same thing, right? Yeah. Roof needs to get replaced. You owe $15,000 because deductibles are so high now. They subtract whatever percentage.
Yeah.
Yes. So I hear in the medical world, everyone uses deductible as the universal term for deductible or max out of pocket.
Yeah, you're talking about health insurance.
And health insurance, yep. So
deductible versus max out of pocket are two different things. Deductible is included in max out of pocket.
Correct.
But it's only part of max out of pocket.
It's step one. Exactly. And so you've got step one, and then the max out of pocket on a health insurance policy is truly, that is your capped financial exposure. You're done. Once you hit that. But everybody has deductible in their head. So I can tell you about 98% of the time, and I'm gonna give the extra 1% for some people who might know, but 98% of people I talk to, they have no idea when I talk about max out of pocket. Like, they don't even know that term.
So let me
and
see,
that's okay. But
that's not my specialty. I always joke that I got 10 minutes of BS with somebody about health and I'm out.
Right.
And that's somewhat true.
I think you have 12 now.
I can't keep up with it. It's too much to keep up with everything else I have to keep up. So you've got a $5,000 deductible.
Okay.
You've got a $7,500 max out of pocket.
Okay.
That's not out of the ordinary for health insurance.
Not now. It's actually pretty good these days.
So $5,000, the first $5,000, no matter what, is on me. I have to minus
copays. Yes.
If there's any copay.
If there's a yes.
But the first $5,000 is on me. Now, after we hit 5,000 on my policy, I'm going to see that it'll say something like pays 80% after deductible or 30% after deductible.
Yeah. So it'll usually, the percentage that you see on your policy, it's going to show what you owe. So you're usually going to see anywhere from 20 to 50.
Okay. So
that's what so let's say, and that's the co-insurance. So
I pay, if it says 30% after deductible, that means I'm paying 30%.
Correct.
And they're picking up the rest.
Then the insurance company is paying 70%.
So if I've got $1,000 bill and I've already hit my deductible.
So let's say $6,000 bill. So you start fresh out of the gate, boom, first treatment, because you have a $5,000 deductible in this example. You have a $6,000 bill.
Okay, I was thinking after I hit deductible.
I know. I was just trying to walk them through everything. So from $0 to 5,000, you policyholder member are paying 100% of 5,000. As soon as that 5,000 hits, that remaining balance of 1,000, you pay 300, insurance company pays 700, and you're going to keep doing that until your total cost that you have paid is 7,500 in this example.
Yes, thank you for letting me talk that out loud.
Sorry,
I was trying to figure it out in my head.
Yeah.
So no, that's where I was going with it. Even after they start picking up and you're splitting, at some point, the most that you have paid is $7,500, which includes your $5,000 deductible. Now they're picking up the rest of it.
100%.
Yeah.
For a covered medical expense.
Yeah,
yes. We're not doing boob jobs.
Yeah.
Unless it's medically necessary.
Correct.
And then that would be the other thing where I get co-insurance and copay confused a whole lot too. Copay is basically your admission fee when you go to the doctor. Not all policies have them. Most do. I say most. It depends on if you're getting it from the marketplace, then you may or may not. But the copay is, hey, you have a flat rate when you walk in somewhere to get treated. So I go to my primary care and I know it's $30 every time I go. I'm going to pay $30 to see the doctor. And then any test or anything they run behind the scenes in addition to will be subject later. But just the ticket to see my doctor is going to cost $30. The co-insurance is the percentage split after the deductible is met. So,
all right. So
there's that.
Here we go. Here's another one. You ready?
Yeah.
Since you used to be an adjuster.
Are you going to hit me with the...
What is the definition of a claimant?
A claimant is the third party, which is the third party making a claim against the insured, which means if you and I, in the example, you rear end me, I would like to use a different example. I'm kidding. We're insurance gone wild, right? Like, that's funny. We can cut that if we need to. But anyway, we're in a car accident. You run the red light. You hit me. We all know you hit me. I am the claimant making the claim against your insurance company. I am the third party claiming damage against another person's insurance.
Okay. So let me throw a little bit of a deal into this.
In a liability claim.
Yes.
Well, sorry.
That was going to be other. What's a liability? What's liability?
Well, liability is your exposure, I guess, right? For shit hitting the fan.
That you're responsible for.
That you're responsible for. Yeah.
So in my case, if I hit you, I'm the one that's liable for your damage, and you're going to make a claim as the claimant against me.
Correct.
Okay.
Now in health insurance, the member is the claimant because I'm the one making the claim against the medical. So it is different, but it's so funny. I do health insurance and I initially went to my claims.
So
in third party liability. Yeah, no.
We were going adjuster portion. So
true.
What if you are making an uninsured, underinsured claim against your own insurance company? You
then become the claimant.
That's correct.
And they will treat you. They will treat it as though
you were a third party that got injured.
Correct. Which means, what that means and why that's so important is because if you're making a claim, if you were at fault and you're making a claim against the insurance company and you're like, man, I wrecked my car and blah, blah, blah. And I was hurt and it was really bad and blah, blah, blah. But you caused it. That means your car gets covered, however it's covered based on your policy. And then the medical is, well, do you have personal injury protection or do you have med pay? That's it. That's the end of your claim. If you were hit by somebody who was uninsured or underinsured to cover the cost of your damage. And in this case specifically, we'll talk whether medical bills, the injury, lost wages. Now the insurance company is going to assume the role and say, because in a claimant's settlement for a bodily injury, the three things are taken into account: your medical bills, your lost wages, and your pain and suffering. Yeah. But if you are just the insured, it doesn't matter.
No.
So yeah.
No. All right.
Were you listening to any of that, or were you reading something?
No,
are you watching cartoons
both.
again?
No, I'm watching.
I'm just kidding.
For those of you that are old enough, I'm watching Deputy Dog. Dog. Some of you will get that, and some of you won't. So I was going to our keyword of the day that we had talked about. Are you ready for it?
I am. I won't have the good definition, but I'll give an example.
Are you ready?
Yeah.
This is really not a word that most everyday people are going to.
No, this won't really even help people too much, but it's just fun to say.
It could, but it depends. But we're going to talk about it because I was giving her a hard time about it one other episode. Estoppel. What is
I hear that. I'm like, escape. Every time my husband and I see a Ford Escape, we're like, escape. And I don't know why, but we can't see it and not say it.
Kroger being called K. Roger.
K. Roger.
I'm going on to the K. Roger.
I used to say Kroger's all the time. And then I was like, oh my God, it's Kroger. And then now it annoys me when people say Kroger's. It doesn't matter, but so Estoppel.
She hasn't answered the definition yet, folks.
No. So essentially,
maybe she's forgotten.
No. I got this. I don't have the legal definition.
It would have really affected you as an adjuster.
Mm-hmm, has not come back to my noodle like it did previously. Okay. But right. In a real world example, it is basically an insurance adjuster. A claims adjuster cannot in writing say they will accept liability for something and pay for something and then go back on their word.
That's true. I don't even know if they have to.
You said specifically it had to be in writing.
No, but I said specifically had to be in writing.
You said the key is it's got to be in writing.
Well,
when we were talking about it before.
Yes, that's correct.
When we were talking about it before, and you were like, no, it's not that they just said it. It has to be in writing.
The reason is they can always come back and say, well, I didn't say that. No, listen, I got it in writing.
Right. Or if it's on a recorded interview, which we do recorded interviews.
True. So that's exactly what if you run into a claims issue where a claims adjuster says, yeah, we'll pay for that, and you've said it in an email or a writing, and then they come back later and go, no, we're not paying for that. Sorry, that's Estoppel. You can't do that. And if you use that word, they don't like it. They start getting a little jumpy.
Yep.
Because they know you got them. But most of them are pretty good about not agreeing to anything until they know all the details, which is smart on their part.
Well, absolutely. And you want that because if you're the insured.
Yeah, you don't want to make plans based on something that they said willy-nilly.
Correct.
And that's the problem with Estoppel. That's why that was there. It's just people were going out and said, well, you said you were going to pay for it, so I'm making plans to go this direction. Now, all of a sudden, you're pulling that back. And I've seen that happen in a couple of claims, not any of our claims, but I've heard the people talking about it. They're like, well, the adjuster told me this. I'm like, did they write it? Yeah, I've got an email. I'm like, yeah, they can't do that.
Yeah.
That's I shouldn't say they can't. They better have a dang good reason, because if you take them to court.
I mean, there's got to be new evidence or something to change the situation. Excuse me. But,
yeah,
and the one thing.
Material information.
Yeah. So I believe, but still, you need to be careful with that. Just having been a claims adjuster, I know it was very, very clear. Once you write it down or you type it, that's evidence. Mm-hmm. And it sounds silly for like evidence. What for for litigation, everything is discoverable. Yeah. Every note that you write, because you would have some people who were just crappy on the phone, and you're like, angry lady called in again. And I wanted to say that a couple times, but you have to be very, very careful with tone and what you say. And then you also, anyway, it doesn't matter. But yeah, you don't put it in writing.
Yeah.
But I think the other reason for that, I would say the writing is so important is because how many times do you talk to somebody and people have selective hearing or selective memory?
Oh, yeah.
And so a conversation goes on and they're like, yeah, I mean, assuming everything looks the right way and we can and now the insured is like, oh yeah, they totally said they were going to buy my roof and no problem. So now that's not what I said.
Mm-hmm.
I said nothing like that. But you have selective hearing, which then turns into selective memory. Anyway, so I think the in writing thing is crucial for a reason.
Do the same thing to your underwriters. Like I told you 3 times with underwriters, this is what's going on. Oh, yeah, I guess I didn't read that.
Ugh.
Well, how can you make a decision?
Do better at your job.
People are people. I get it. So, insurance companies are what they are. What about depreciation? Depreciation.
I do, but I feel like you're going to explain it better. Like it's basically the devaluation of an asset, essentially.
That's basically it. After over a period of time, every item or every asset has its own depreciation schedule. If it's a refrigerator or versus a roof versus a TV versus a couch, socks. They have different. And
I say that because there are some policies, our former company where I was telling you, I was like, I even had to just go look. And that one policy that we got quoted was so much less, but it had personal property was quoted actual cash value. I'm like, listen, you can't bring back the memory of my 12-year-old socks. But it was actual cash value.
Or church going underwear, the ones with that are holy.
That's right. So. I should look through my drawer again, but the point is
basically it. CPA, it's an accounting term. That's really what it is, but it affects the insurance.
Yeah. There's people probably know depreciation a little bit more, because of taxes to pay, like especially if they're business owners or whatever, but,
all right. So I'm going to talk about this one just real quick, effective date. Because our new guy, Sam, who's in process of studying for his exam and taking his insurance license test, we talked a little bit about this. He was helping me with some quotes.
Okay.
And inputting them. And so one of the one he's inputting, it says that their policy ends on March 30th. 31st. It doesn't matter. March 30th.
Let's say 31st because it's end of month.
Let's say 31st. He said, Dennis, should I start the new policy on the 1st? This goes through the 31st. And his answer with him was, no, your auto policy start and stop the exact same day. The effective date of the new policy is the same day the current policy ends. Here's why. Because that current policy ends at 12:01 a.m. The new policy kicks in at 12:01 a.m. So you start and stop the same day. If we were to start the policy on the 1st, he'd have a gap in coverage. So the effective date is the date that the policy starts.
Which is interesting because that's not how health insurance works.
No, but PNC, that is how it works.
Because if you typically are canceled at the end of a month, I would say for most stuff, other than your kind of individual, like your short term can end at any time and whatever. And then most policies will not begin, not all, until 1st of the month. So last day, 31st, 1st of the month.
The most effective days are on the 1st of the month for you. Even if you...
But that's group, that's individual. And again, there are some one-offs. I mean,
we've got the same thing.
There's short term. Truly short term could start the next day, as early as the next day.
We have one auto company that will start the policy the same day. I'm like, that's weird. And there's not necessarily a gap in coverage, just the way they do it. And I'm like, I don't know how you do it. When one ends at 12:01 a.m., we're bringing you the new one. I don't get it. I always push for them to start it and stop it the same day. It makes no sense to me.
Well,
because it says 12:01 a.m. I'm like, I've got a 1 day gap. No, you don't. I'm like, listen, I don't think you understand how dates work. So anyway,
yeah, it's interesting to me.
I think as an agent, you have to be aware of that one particular company that does weird stuff like that. You're always going to have one-offs. But on your side, on the health side, if we had a group that wanted to, they said, okay, I'm ready to write this on the 10th, you go back to the 1st. They would have coverage from the 1st of that month, right? On a group?
It depends on the carrier.
Because they're paying by the month anyway. They're not paying by the day. By days.
Yeah, but it does.
Because on auto policies, it's prorated.
Oh, yeah, and we can't. Like, oh, wait, what? Give me your example again. I'm sorry. I think I had selective hearing and blocked most of it out.
So if we're a group, if I'm a group and on the 10th of March, I say, let's go ahead and start this effective today, you could say, yeah, we'd go back to the 1st, no additional cost. Because you're paying by the month anyway. You're paying from March 1 to March 31st, April 1st, April 30th. You're paying that way. So let's just go back to the 1st, right? On group.
Yeah, I would say yes, with the exception of sometimes, like you could easily do it on the 5th with any carrier.
Okay.
Yes, but that was my only thing. I'm sorry. Yes,
yeah.
But after, and I've had some carriers where as long as it's quoted the month before, then they can sign the paper. Like if they are quoted February 27th for a March 1 effective date, and then they don't sign the documents and send everything in until March 27th, there are some carriers, not all, but some that are like, yeah, that's cool. Just make sure they pay for 2 months now.
Yeah.
Which is crazy to me. And like, it's absolutely, it's nuts.
Yeah.
But I love it. And I do appreciate that.
All right.
To an extent.
But we're getting ready to be out of time. There are so many definitions.
Yeah, I know. But we're trying to get, give me a quick lapse. What is lapse?
A gap in coverage.
You don't have coverage. So
there is no coverage during a lapse. Here's one right here that I think begs us to talk a little bit about. Material misrepresentation.
Oh, yeah. I think that's so important.
It's material. Is it material to the decision that was made? So we had talked a little bit at one time about
at a fun luncheon, because that's what we do.
It may be one of our other recordings was that an insurance company typically does not cancel a policy midterm. They may non-renew at renewal, but they don't typically cancel.
Right.
And we talked about the difference between the two words. They won't cancel unless there is material misrepresentation, or you just didn't pay the bill.
True.
So if you lied about something or you didn't pay.
And lied about something big. So the material part is, so there's misrepresentation,
the
right? So there,
even on insurance, that's the key.
Yeah. Misrepresentation is, oops, I got the date wrong a little bit. Like, oh, I thought my roof was replaced in 2018, but I guess it was 2016.
Yeah, or I've got
not a huge deal.
Regular shingles versus architectural.
Yeah, and they'll adjust the premium and do whatever once they discover it, because they will.
Well, yeah,
they will adjust that, but
the date of the date that the roof is replaced. If we as an agent says that roof is 2025, 2024, 2023, 2022, and we discover that it's original 1998, that could run into an issue as material misrepresentation. And there is one insurance company out there where their agents do that all the time, just so they can get the business. And we won't do it because material misrepresentation, if it's on the agent's part, that means it was intentional, which is fraud, which is a felony, which is you could lose your license. It's not worth it. It's not worth it. So if you have an agent that does that says, that, especially in North Texas, that says your roof is a whole lot newer than what you know it is, and you told them, then you got a problem with an agent. And there is one company agents that do that all the time. Okay,
so I want to talk about the material part and then just go a little deeper into what that truly means, the thing, and then remind me to tackle that part, the agent.
All right, well, we're running out of time.
So the material part is something. I mean, misrepresentation is something that is like, oops, again,
Yeah, that
my
happens.
bad, 18 to
That
16, whatever, my bad. Incidental or accidental, more so, right?
Or even incidental.
Well, yeah, whatever. Just it's minor. It doesn't affect how the insurance company, whether or not they would insure you or not. So from a life insurance standpoint, do you have any issues? Have you had this? Have you had that? They go through a series of questions. If you lie about, yes, I know I have cancer, and then you somehow make it through the initial implementation of the policy, and within the first 2 years, they find out this fool over here got diagnosed with cancer 6 months before they got the policy. Material misrepresentation.
The insurance company, life
and
insurance
now
will not
they could
pay
be like,
out.
no, we're done.
Yeah.
And then
And
God
I've had
forbid
that.
something happens and
I've
they
had
can
that.
actually decline and say, hey, appreciate you so much, but we're not going to give you whatever amount that, the face value of the amount. So, and then same thing again. And we used, like the roof material is a big one. And even something as simple as, there are so many carriers that don't do metal roofs. And so, hey, you've got a big shop on your property. Cause I had this with one of our clients, or whatever. Their house was architectural and there's normal shingle. And then they had a shop with a metal roof and they were like, we don't want it. But had they said, oh yeah, no, it's architectural, it's fine. Well, once they discovered it was a metal roof, they would have been canceled immediately because
Could have been.
they don't cover metal roofs. So again, it's something that determines whether or not the insurance company wants the risk, right? In a nutshell.
Yes.
Yeah.
Yes. We hope we probably gave you some questions, and there's a lot of terms hundreds of terms we didn't even touch. But if you have questions or have a question about a particular term, please reach out to us. Let us know. Here's our email address. You ready?
I'm ready.
contact@igwpodcast.com. That's all you got to do. Send an email, or you can give us a call at 817-753-0093. That is for our Panatella line. But if you call us, we will return your call. One of us will. 817-753-0093. Check us out on our Facebook page, facebook.com/insurance gone wild.
I'm going to throw this out there.
Yeah,
we will send you a $25 gift card if you send us an email, either with a wild insurance story, a question, something that, I keep looking everywhere. Sorry. A question, just anything, but send it, not like, hey, it's Tom. Like, don't send us that. But if you give us a relevant, like a real email to, what was that again?
contact@igwpodcast.com.
We will pick one, talk about it next week, and we'll send out, we can send out virtual an Amazon gift card where you just send it to an email so they don't have to give us their address or whatever.
Yep.
You good with that? I did it. I'll do it.
Well, we probably need to put it in a drawing in case we get a ton of people sending us stuff.
Yeah, in a drawing, for sure. Yeah, if we select it, yeah.
Yep.
Perfect. But we want to encourage, get involved and reach out to us. And
all right.
Does that work? There we go.
That's it.
You're welcome.
Thank you.